I got to get your reaction to this news right now. The EU saying they did not receive this letter. We were already talking earlier in the show about some of the tensions between the U.S. and China, not just negotiations, but also tensions. What do you make of this?
This is yet another data point to kind of, again, reaffirm for what we have known all through this year. This is a very headline-driven market. It's a trading market. That's why our playbook in a market like this is to think long-term, 5 years plus, stay diversified, and be very disciplined, and not get whipsawed back and forth on the daily news cycle.
All right. With that said, I just want to bring you a contrarian view. I was actually talking to Michael Hartnett, the chief investment strategist of Bank of America yesterday. He told me tariff narrative's over. He believes it's all going to be resolved by Labor Day. He says right now it's about the spending bill and tax cuts. What do you think about that take?
Yeah, I mean, the spending bill is definitely what's front and center right now. What does that mean for increased debt, for longer term growth outlook as well? So I think that's definitely front and center. But the tariff news has not gone away. And we've seen that already end of last week, the back and forth. We saw that the news on the steel and aluminum. So we're going to continue to have these drips and drabs. It's difficult to see how we're going to resolve the tariff or the trade war we started with, almost 180 countries around the world to get resolved by Labor Day. So I expect this continued drip drab going on for a while.
So your word of the day today is whipsawed. What do you mean by that? What do you see being whipsawed?
Yeah, I think it's the back and forth that we keep getting. We had the market sell off, then the market bounced back again. So this is very much a trading market environment. And if you're not focused, if you don't have conviction on what you're investing in for the long term and just chasing the daily news feed, Frank, we think you're going to get really caught. You're buying stocks one day, they go down the next day on a tweet or a news item, only to see a different group of stocks lead. So that's what we mean by getting whipsawed all over the place. Even look at the bond markets. That's been yo-yoing all over the place. Yet year to date, the 10-year is down only about 17 basis points.
All right, Nimrit, very quickly, we want to get to your pick. We're going to view our mystery chart as well. It's TJX. What's giving you so much confidence in this company right now?
In an environment like this, which we heard from all over the retail earnings, the consumer is feeling the pain, and consumer across every single demographic, every household income level is continuing to look for value. That's where a model like TJX really shines, the resilient business model. There's plenty of space for them to continue to grow. They posted about 3% comps in the quarter. Just continues to show you how important it is to invest with a resilient business model like TJX.